module, how to trade the first 90 minutes, you'll understand why, which is a big part of doing anything. Why are we doing it? You have to understand why we're doing it and what I'm explaining to you. So again, as we go through this, maybe Mike or Joe, who I see here, are with me. You can see your questions. If they can post them to me, that would be great. I welcome the questions. I enjoy it, getting the feedback and helping you all,
Really
to understand what we're doing here. Okay. A little bit about myself and Pristine. I actually started learning from knowing absolutely nothing. Probably, I guess it was back in the late '80s. Basically, the Stone Age of online trading. Honestly, there wasn't even online trading. It was picking up the telephone and calling a broker. That being said, I did have real-time quotes. Probably one of the few individuals that did. Through a satellite feed that I had on my roof, was able to eventually hook it up to a pretty archaic intra-day charting platform and see charts as long as the weather was permitting. If there was a rainstorm and a lot of clouds, the data stopped. And, that's a little scary. It's like your internet going down. But that was the beginnings of the technology that's offered today, which is fantastic.
Oh, you hear him fine?
If you were trading back then, you can really appreciate how far things have come, which is just light years ahead of it. Created Pristine. This was back in 1994. Been teaching and actually formed the company as a way to pay for data feeds and such, which were pretty expensive back then, and it took on a life of its own. And been doing this now for going to be 20 years in September. Gone to quite a number of expos, done trading challenges, as it says, won 6 of them, wrote a few books. And we've been educating a lot of professionals, including market makers and hedge fund managers. Some of you might be starting out. It says maybe never owned a stock. We all started somewhere. When I say virtually all of our competition, I actually mean that. There are many, many educators in this industry that were Pristine students at one time or another, and probably still attend a lot of our free workshops to get brushed up on things. Best trading education, I'll show you what that's about, but we voted best trading education in 2012 and 2013 by those that have taken it, of course, and people that know Pristine, and go through that voting. Facebook, free service that we have, on Facebook. A lot of our students post their trades and commentary between themselves. They might ask me about something that they've done, and we go back and forth. It's all educational. You're welcome to go to the Pristine group and become a member. There's a lot of free information there. You become familiar with Pristine, talk to other Pristine students, or there are a number of them that aren't Pristine students, just there to take advantage of talking to others that are trading and gather information. Disclaimer: I have to say, you can lose money. There's risk involved in this. Education. Obviously, we believe education is how to get started in doing this. And at a minimum, it'll give you a chance to become successful at doing this, rather than taking the trial and error approach, which many of us probably have started out doing that. I know when I began, there really wasn't any education out there, so it had to rely on trial and error and newsletters that came through the snail mail and so on. There was no internet, unlike today, where there's a tremendous amount of education out there, and you as someone that might be starting out have to sift through that to find out what might be good and try to avoid what might be bad. It's like any other business. there's some bad stuff out there as well. And lastly, I am a registered rep with Lightspeed. And that aside, let's move on to some more interesting stuff. Here's where we were voted Best Trading Room, Best Education 2 years in a row. The Chart of the Week newsletter is something that I write on Mondays. It's a free service. Just by going to the site and putting in your name and an email address, you log into the site and you could read that on Mondays. And we have other services, Eyes of the Pristine Trader, Lesson of the Week. We offer a lot of free information that'll help you. Either if getting started, become familiar with Pristine. It's ongoing education, and whether you take education with us or not, it's all good stuff that you'll find interesting, and it'll help you in what you're doing. A little bit about the approach and setting up that foundation of why I'm going to explain things to you the way we are. At the beginning, we're all inundated with information like this because, and we do have a tendency to believe that this is what's necessary because we can believe that, to understand the markets, it needs to be complicated. And it doesn't have to be, and I spent time researching this type of esoteric holy grail type of information because human nature being what it is, we want to think that we can predict the future, and to some extent trading is about predicting the future, but it's about doing the analysis to increase the odds in our favor. It's not about absolute knowing, and these types of analyses are about trying to figure out to know, to be sure about it. These waves within waves. I know there's a pointer system on here. Let me see if I can. Here we go. Spotlight. Here we go. Little spot there. Waves in waves, and can always find some wave that's connected to another wave, and all the different lines and GAN and cycles and so on. And as I said, I didn't avoid studying these types of analysis. I guess it had its place in bringing me full circle to what really matters, and it's really simplicity and the basics, which we'll cover. I guess you can't advance this with the drawing tool on. Okay. And this is what would be considered the simpler technical analysis, what I refer to as a spaghetti screen. And all of this again is just a different level of trying to predict turning points and where support is and where resistance is. And part of what turned the light bulb on for me many years ago, I read a book called Winner Take All. Sorry about this. Slides they do advance themselves. Haven't figured out how to stop them from doing that. And the fellow that wrote that book, I believe his last name was Gallagher, he didn't believe in technical analysis at all. He actually thought it was a ridiculous concept, and he focused on fundamentals, trading commodities. And he referred to a technical analyst from the point of view of when we were a child, and our mother gave us these books where we connected the dots, and as we connected those numbered dots, it drew a picture. And he said a technical analysis just never grew up from wanting to connect the dots, and draws these lines on charts, and it kind of, well, I didn't buy that the technical analysis was worthless, of course. It did turn a light bulb on to me for some common sense type of thinking, and that is it really possible by connecting dots and extending a line into the future to predict where support and resistance is? And it just didn't hold up for me, just as from a common sense point of view. And as I connected dots, and I would question, why didn't prices stop on the line? Why do they stop on the line sometimes? Why the prices turn at when the indicator says it's overbought, or which indicator is it that we should actually use? And I finally, came to the realization that, well, you know what? You put enough lines and moving averages on there, and I can prove to you what I want to prove to you with these lines and moving averages. And eventually, I just took all of that off the charts, and things started making sense for me. Even the idea of being overbought. How do prices move up when they're overbought? Because the term in of itself suggests that prices are going to pull back. And as you go through all of these indicators that come with these fantastic programs that we have available to us, and then we start thinking about all the settings that we can change and the combinations, not only in the thousands, I guess they're infinite, because you can change the settings, in so many different ways. And that just leads to more and more confusion. So, I just decided eliminate it all, and things just started to make a whole lot of sense. And that's not the foundation. Getting back to basics. So whatever is said in the news, whatever you read, as someone approaching the markets from a technical point of view, it's about looking at support and resistance and what's the trend. Keep it simple. Prices come down to an area where they have broken out from in the past. There should be buyers there, and vice versa. And our price is moving up, down, or sideways, and we'll talk about that in more detail, and putting together multiple time frames and bringing it all together for an approach for trading those first 90 minutes. Having the proper mindset, right? And this is where we come from with our approach, and that price patterns are not about head and shoulders tops and flags and pendants and the different names that there are for all of these patterns, and from a point of view of explaining to somebody these patterns and pictures, we can communicate a large pattern like a head and shoulders top with a few words. So from doing it like that makes sense, but to understand that these patterns are a reflection of what other people think, it really starts to hit home why we look at charts and technical analysis. And as you evolve as someone trading through charts, you will understand this point, and it really hits home as you live through the chart and as it's forming. Meaning, did you hold through a head and shoulders top, or did you buy a stock in an uptrend and you sat there while it formed that flag or pendant, and what you're involved in your own thoughts as to what was going on, and did it try to move lower and then form some type of a bottoming pattern and move back up. So as you experience these patterns, you have a greater understanding as to what they mean beyond just these names, and that's what's going to guide your thinking. So we look at these pictures, right? Rather than calling these different patterns, these are just pictures of buying and selling, and at times just uncertainty and confusion. Just because we can look at a chart doesn't mean that we necessarily have to understand it from a point of view of placing a trade. Right? Many times it's just about not placing a trade and understanding that there are times when charts are a mess. And I have an example where I'm going to show you that, everything that I'll show you what has worked in the past and is probably going to work in the future. And that's what we do with the charts. There are times where they just say stay away, and that's powerful in of itself. So where these pictures, where they occur, the location of them is what increases the odds. So when we look at a buy setup, however we're going to define that, where that buy setup forms is going to increase the odds of it following through. And so simply to, a buy setup at support within an uptrend puts the odds in your favor. It really is that simple. And money management is key to everything that we do. If we don't bring money management into our trading plan, the odds of us succeeding are pretty slim. And putting this all together, the bottom there, confidence and patience and discipline are keys to success. Now, how do you attain that? Well, you can only gain confidence first by learning something and then experiencing it. Right? That's anything that we do in life. We go and we get educated about whatever it is that we want to do. We're not confident in it at that point in time, but we experience it and we do it and we make mistakes and we learn from those mistakes, and that builds confidence. The patience comes with time, but patience is a really important factor in becoming successful at doing this, because if you're not patient to work through the education, through the losses that you'll experience and the wins and keeping journals and stuff, you don't have the patience to work through that, your odds of success are going to be pretty slim as well. We all want to make money, that's the goal, but you have to have the patience to realize that it's going to take some time. And the discipline part comes with, if I don't follow my plan, I lose money, and that just comes with doing and losses, and eventually you just come to the realization that if you don't follow the plan, you don't have the discipline, this isn't going to work. So one of the things that I studied years ago and questioned was, why is it that prices move from certain patterns and other times they don't? Because back then when I was questioning this, the patterns that would form, they all looked the same to me. That was a buy setup, and here's another thing, pattern that looks like a buy setup to me. I really couldn't distinguish the difference between the two. But as I studied them, I found that, when there's this void that I talk about, and that's when prices had a high tendency of moving either rapidly or trending. And so what is the void? The void is areas where there are no reference points to the left, called support and resistance. You say, well, how could that be? There's always something over there to the left, Greg. Well, yes, there is. However, let's see if I can work this pointer again. However, when prices move rapidly like this and there's no congestion areas, there's nothing to work off of, to trade off of, meaning any of you that are looking to buy whatever it might be, you're probably looking to buy a pullback, right, to some area on the chart where possibly prices broke out of a base, or they had pulled back and they formed a high, and then they pulled back to that prior high. So if there's nothing over there to the left, where are we going to place bids to buy? And this is what most traders do. Right? They place bids in the market at some area where prices held before. Well, where am I going to place that bid if there was no place where it consolidated or pulled back? Now, when prices move like this, obviously it indicates strength, momentum, and buying. And as prices go sideways over time like this, it begins to build up a little area of support. And strong stocks, strong markets, whatever it is you're going to trade, when there's a lot of buying or demand, they go sideways like this. And they may not pull back, right? And then they'll continue to go higher. So this part of the pattern right here all suggests prices are going to continue to move higher. And this BOF is an acronym for what we call a breakout failure. Sometimes breakouts do fail. So in a situation like this, with a failure, sometimes I refer to this like a shock pattern, there's nothing to stop prices from moving back down. So recognizing that and adding this to my analysis and my plan, it increased the probabilities that prices would trend, because there was nothing to stop it from moving back down in this example. Once it came down to an area where it started to move, there probably was going to be buyers down there. And so in this case, a breakdown, a retracement toward some resistance and a continuation pattern, our initial target would be down where the move started, and then we manage from there. So a void is an essential part of what we look at and the method, and combining that with the setups that we're going to look for and what I'm going to show you. Okay. So our job as technical traders is to mark off reference points like this high. And prices pulled back from here. And odds are, if prices get up there, again, there's going to be a reaction to it. The same thing with an unfilled gap. As prices come up into there, there's going to be a reaction to it. The question is, how do they react? So, how do they react? I'm going to turn this pointer on again. Right over here, as we see prices going sideways in the area of an unfilled gap, we would recognize that as being bullish, as buyers stepping up. And look how prices went up over here. Right? They pulled back onto this high, and they went back up rapidly. So I would recognize this as a little mini void here. What's going to stop them from pulling back, especially coming up into this gap here? So as I see this price action, and I see it's not pulling back, and I look at these individual bars and I say, oh, all right, look at that bar right there. Prices went down and they popped right back up again. That means that there's buyers under current prices, and they're bidding down there, and then they're pushing prices back up again. Versus over here where prices came up into this resistance and then forms this tail on the top here, tells me sellers are taking control. So I look at this and say, well, prices are going to move between these reference points, and my job is to recognize the reaction to those reference points. And of course, is that in alignment with the bigger picture trend? Putting that all together to say, well, there's likely to be a greater reaction here than over here. You put all these pieces of this puzzle together for finding higher probability trades. And this is, in essence, what we're looking for within the first 90 minutes of the trading day. This is part of it. So here's our, this part here is our daily chart. Prices had been moving up, and prices gapped higher above this resistance area. And a simple Technical Analysis 101 concept. Sorry about this moving up like that. What was resistance should become support. So as prices gap up and pull back into what should now be support, right? The location, I've got the location, and now I'm looking for a pattern to form in alignment with the location. So here's the intraday chart. Here's the intraday chart. What's happening in the bottom of this bar in this location? So here I see a pattern that we all recognize as what's called a W bottom. Right? Sometimes I call it as a double bottom. But this low, the swing low here, is what we call creating a new support area. In other words, it's forming a swing low in this area here where this gap, right, is now forming this support area at what was resistance is now support, and this sets up a trading opportunity first thing in the morning. So this picture, again, this picture is a tradable event in alignment with this bigger picture. Now, one of the other concepts that I learned, right, and I learned it through getting caught in situations like this, and we've all had that question, if I only would have turned or flipped on that trade, the money I would have made, right? But how do we do that? You know, we have to understand it. And so that's what I call shock bar patterns, catch traders on the wrong side, right? We've all been caught on the wrong side. I'm hating this PowerPoint. There's a little breakout here that turns into a topping tail. And remember, I said patterns are pictures of what other traders are thinking, what they've experienced. Look at this gap down under a green bar. If you've ever been long a pattern like this and the day before, you went home thinking, hey, this looks great. It closed near the high of the day. It's going to move higher, and it gaps down under the low of that bar. You understand the concept of the shock. If you bought a little breakout above this and you've got a big green candle up near the high and it reverses and it's down near the low of the day on the next day, or even if you experience this on a 5-minute chart, you understand the concept of a shock. That's why it says imagine being in the pattern. What would you do? So when you look at patterns in this way, it gives you a deeper understanding than just recognizing what might be called a bearish engulfing pattern or a piercing pattern or a dark cloud cover or whatever the names are for the pictures that you're looking at. So these are what's going to set up high probability setups. If I can combine the support, resistance, trends, shocks, and so on, voids, I'm going to find higher probability trading opportunities. Well, here's an example, understanding shock and starting to put this together here. Right here, nice green candle coming off of a low, retesting this support here. Looks like it's going to go higher the next day. And here, as I got the green arrow here, right, this is what it looked like intraday. And the next day it gaps down. Here's the gap down and the reaction. So looking at one candle here, right, this is what we refer to as a topping tail candle, or this reaction in alignment with this shock, and this void has a higher probability of prices coming down to this area, where the buyer should be, the unfilled gap. Again, we're going to combine a bigger picture analysis with a smaller picture analysis to put together a plan for what is likely to happen in the beginning part of the trading day. Okay, so here's our initial plan. All right, we're looking to trade, says within the first 2 hours. Probably things are going to set up, right? It says most of our entries within the first minute to the first 15 minutes of the day. So you have to be ready, meaning, you've done your analysis from the night before, you've got an interest list. We're going to find opportunities in the morning as well from what's moving. We're going to find out what's moving. We'll scan, it says gapping stocks, whether they're gapping below support or above resistance with that void. Right? In other words, it's cleared some reference point and it has room to move. Right? It's a key factor. It's cleared one point, odds are it's going to go to the next point. So I'm looking for those gaps that produce shock. And I'm going to look at the bigger picture, the daily time frame, and I'm going to look at the intraday time frame to see if it's in alignment with that. And then I'm going to trade those patterns that are in alignment with that. And you're going to have a pre-market bias. I mean, you'll look at what the broader markets are doing at that time. Are they gapping up? Are they gapping down? We use concepts of relative strength and relative weakness with the stocks that are gapping. And we come to a point where we say, well, this is what we're going to focus on. And this is done in our chat rooms every single day. And so if you haven't been in Pristine chat room, what we call a Pristine method trading room, you know, you can get a trial and go in there and see how it's done every single day. They're going through what I'm explaining to you here, and it's explained to you. You see the trades being taken, and then they're reviewed later in the day, you know, to go through, hey, this one worked, that one didn't, this is what we're seeing, you know, and so, you know, it's all part of you know, a learning process that is what we do and help what you guys with. Well, let's put this together. And it says this is what we're looking for here. I've got a daily chart within an uptrend. Look at the pointer here. Let's try the arrow. And you see this bar right there. All right, notice it was higher that day and closed near the low of the day. And then it gapped up the next day. So we've got a gap, and I'm really disliking this software and this PowerPoint. The gap is clearing this resistance, right? So it hasn't gapped too far. So if it pulls back to what was resistance or consolidates above it before the move higher, you know, that's a sign that it should continue to move higher. And we're going to look over to see if it's got that void over to the left. Now the entry, like I says, it's not seen here on a lower time frame. So you could enter off of this time frame by just trading above that bar's high, or in a lower time frame you would buy a pullback into that gap up, right, and support. Okay, so where are we going to find these stocks that are gapping? Depending on the platform that you're using, you know, you would find it in different areas. This one that I'm showing you is the Real Tick platform on this slide, and it's got stocks that are gapping up, that are gapping down on the NASDAQ and the New York, and the gainers list and the losers list, and you're going to take those symbols as a starting point. Look at your daily time frame, look at your intraday time frame, and formulate a strategy. And we'll talk further about, okay, what's the strategy and what do I do with this from there. Right. With the Lightspeed Trader platform, you can find these stocks that are moving pre-market in the riser and faller list. And you can link this to your charts, click on the symbols, again, it's a starting point, and see what's going on in those charts. And look for support, resistance, trend, void, pattern, and market opens up, stocks trading. You're looking for your setup in alignment with that bias that you've formed. So our gaps, we have what we call pro gaps, meaning it's gapped up from a consolidation or a pullback towards support. And then there are novice gaps, meaning prices, in this case, prices were already moving down, and then it gapped lower. Odds are prices will move back up. Novice gap. Novice gap. Prices are in an uptrend, they're pulling back into support, and then they gap down. Pro gap. Gap up after a pullback into support. And here's the shock. So on our gapping list, if we were to find a day like this where prices were gapping down under the prior day's lows, even though they're in an uptrend, that could set up a short-term shorting opportunity than the first 90 minutes of the trading day. Some examples of gaps that we'd be looking for from our gap list. Prices gapped above resistance and above the prior day's red bar. We're going to like that. A pro gap above consolidation. Another gap up. It's not above a red bar. Red bar meaning, it closed below its opening price. Sorry about this, guys. I cannot get this to stop advancing on its own. It's got a mind of its own. However, this is an example where it might consolidate for the first 30 minutes as it deals with this resistance over to the left, but it's a gap up that presents an opportunity since it was going sideways. Gap up above a red bar, but not above all resistance. So it'll probably have to deal with what's over here to the left for a little while, but it's a good gap. This is why I say I have no interest in this. It's come off of a low. It's going sideways there. It hasn't gapped above the resistance. It hasn't gapped down below resistance. It's gapping inside of the resistance. So I pass on this. Having the gap list as a starting point, you then look at where it's gapping within the daily time frame and make a decision. Does it make the cut or not? A gap below a base. It's got a void below. I say, well, what if this was a green bar? Meaning this last bar right here, if it was green, it would have a greater shock value to it because the green bar would be suggesting that it would go higher, and a gap down below that and the base would be a strong signal that prices would move lower. And then we would look at our intraday charts. Shock, gap below a green bar that was closing at the high and above here. So intraday, look at the intraday patterns and see if there's a void there. And this is what we're getting to, looking inside the intraday patterns. Right. This gap is this one is within the consolidation. Not interested in this. This one has a whole lot of days up. Right? Odds are it would pull back since it's at this resistance area, but there's not much of a gap, so there's nothing here. If it was to gap down, right? If it gapped down under that bar's low, that would be of interest to me. So we have to look at these daily bars, because when we look at the daily bar, this daily bottoming tail bar, as we look at that time frame, these look the same to us. If I look at one bottoming tail bar on a daily time frame and another chart, another stock on a daily time frame, and I see the bottoming tail bar, essentially they look the same. It doesn't mean that they're going to form the same way intraday. So I have to look at the structure of the intraday time frame, meaning Did this bar form by going down, sideways, and then rallying up into the end of the day? Or did it go down and up and go sideways through the end of the day? You can see where we're going with this, because the intraday pattern, right, is going to dictate the odds of the continuation of that pattern. So, for example, if I have a daily bottoming tail bar with an intraday pattern that was going sideways or resting at the end of the day, and then it gaps up in the morning, and it should make sense that this has a higher probability of continuing to move higher versus one where it was going up all afternoon and then gapped up. Right? Odds are traders that held overnight are going to have a greater tendency to take profits versus one where it was going sideways into the end of the day. A lot of this is common sense. You have to put it all together. And the same thing with a daily bearish bar. Was it going down all afternoon? Or did it go down in the morning and then go sideways throughout the afternoon? So a gap down with this type of bar, greater odds of continuation with this type of a base versus something that was dropping all afternoon. Candlesticks. Let's make it simple. Let's get away from all the patterns or the names, and I just look at what does a picture of buying look like. Moving down, a big green bar reversing, back up again, or a bottoming tail bar that was a big red bar before it became a bottoming tail bar. Buyers came in and drove it back up again. A doji, what does that mean? It just means momentum stalled. Right? There was a stall in momentum. The pictures of selling, prices were higher, they got pushed back down again. And so that's the slide says here, match your bias from the longer time frame with the support and resistance, and then these candles. So these pictures, right, say the pictures of selling. A picture of selling you might recognize on a smaller time frame, and you may remember taking trades from pictures that look just like this and getting stopped out where prices moved up above the high of the topping tail bar. Typically that happens because the picture isn't in alignment with the higher time frames and support and resistance. So location, location, higher time frames trend. You have to put it all together. So let's do that. Right. Daily chart. I've got 3 time frames here. Daily chart, a 15-minute chart, and a 5-minute chart. The daily prices have gapped up. So there's a shock there, right? Because this was a red bar suggesting prices were going to go lower. We look at our gap list. Prices are up near the high of the red bar. That interests me. I look at the intraday time frame. I look at where our price is opening. Where are prices opening up? Well, they're clearing the resistance over to the left. They had been declining at the end of the day on the 15-minute chart, but they've gapped above that resistance. So what was resistance should be support. Move down to your 5-minute time frame. Pull back, slowing momentum. Right? The candles are signaling buyers are beginning to step up. And the arrow to the left is, well, this is happening at support. Right? Simple, common sense strategies. What was resistance should become support. I've got a shock, I've got a pullback, I've got slowing momentum on a smaller time frame, and prices should try or attempt to start reversing up based on all of that. And trading is about increasing the odds. It's not about knowing for sure. So as I look at the daily, the 15-minute, the pullback here, it suggests to me that this should work out and prices should move up from there. Now, some of you might get hung up on buying here and looking at a big red bar on a higher time frame. You don't need to be, because your analysis that you're putting all together suggests that this big red candle really shouldn't follow through. It's just a normal pullback in alignment with what we've just discussed. Look at a few more examples. The daily is a sell setup, topping tail. And I look inside this topping tail and I see, well, it dropped earlier in the day, but then it went sideways all afternoon. It couldn't move higher. So the gap down in the morning under this base here, what was support is now resistance. It should go lower. It should go lower. And look over to the left there, the way this went up and the gaps prior to the topping tail creates that void. It should drop. So the setup is a sell under the first 5-minute bars low. Then manage it. Trail stops. Gaps setups happen in different ways. Right? That daily is what we call a 1, 2, 3 continuation setup. You see the big green candle. The big green candle after the pullback. We call a wide range bar, bullish wide range bar. The red bar is a little resting day. 15-minute, that resting day, you can see the sideways there. Prices gap above. Prices gap above to the top of the base. And the setup on the 5-minute is what we call a 1, 2, 3 continuation. You can see the similarities. Right? It's almost the same there. Right? Igniting bar, inside bar. On the daily, igniting bar, inside bar. These are continuation patterns. From what we can see here, there's nothing to the left to stop it from going higher. It's a good setup. It's a high probability setup. So your entry is right above the high of the bottoming tail bar. Manage it from there. Got a couple of more examples, and I'm going to show you a setup that some of you may be futures traders. I'll show you a setup that sets up a lot of times first thing in the morning. Daily gap up above a consolidation. In other words, it was resting, and notice this bar right here. And unfortunately, I can't see what any of you might be typing, if you are, but what I would tell you to look at, or what some of you might recognize, this is so annoying, is the fact that that bottoming tail bar cleared the prior lows. In other words, it was a little shakeout, and then it gapped up. Right? That's an attractive gap. I don't know what it's going to do from there. In other words, I don't know that this is going to turn into a big green candle, but as I look at the 15-minute and I see that this was resting through most of the day and it cleared the resistance, and this 2-minute, this is actually a 2-minute bar, is a bottoming tail bar. It went down toward the support and it rallied all the way back up again. That's a high probability setup to buy above the high of the bottoming tail bar. And there's nothing over there to the left. Right, there, you've got the void. All right, this little bit of a different setup here. Gap down under the base. So this is a larger gap. So how do we deal with that? Well, could be a couple of different ways. One of the ways could be that prices might rally up to here. right? Somewhere up into this area, and you could get a sell set up. The other way would be, as it goes up, it forms a high. Now I've got a new reference point to focus on, meaning it might go up, it might come up here, and it might form a higher high, which could give us an entry point. That's fine. But now that it's formed this high, and this is where sellers should begin to show up, right, I look for a pattern to set up right there. So this is the 5-minute, right, double top or M top creates an area of resistance for a sell setup to form. I'll just point this out here. I don't have it written down, but there you have a secondary setup. It's based on, this was formed a little support area. A retest of it should be where the sellers should show up again. All right, some other factors. Right, what's happening in the broader markets? Are the markets gapping up and that stock is gapping down? Right, relative weakness there. Are those gappers, are they gapping above resistance or below support? Is there a tradable void? Right? Consider the sector, the stock you're trading. I spoke about relative strength and weakness. Internals isn't something that I have really time to talk about here, but just simply looking at things like an NYSE tick, is it an extreme? Morning reversal periods. Key times, 10 o'clock and 10:30. Consistent reversal times over the years. A lot of times the markets and our stocks will reverse at either 10 or 10:30 in the morning. For those of you that are futures traders, this is something that often happens right around the open. This, move up, and you see the 24-hour chart, and then near the open it pops higher, it continues, and then reverses violently back in the other direction. You've got this void, you've got the gap up. Again, remember the other things that we spoke about. Look over to the left there. See where this is gapping into. But this reversal often happens right in the first 5 minutes or so of the open a lot of times. And it might happen just before the open. A lot of times it happens right after the open, but it's something that you want to watch for if you're a futures trader. And here it looks a little different here, but prices were going sideways right into the open. The bottoming tail bar is the key right there. It tried to dip down and violently reverse right back up again. A similar pattern. And here's the yen futures, and same things happen in currencies. They tend to move earlier. If you're a currency trader, you're going to get started a bit earlier in the morning. But similar patterns. It doesn't really matter what you trade. Matter of fact, by the way, if you don't know what this is, these lines here are called trader pivot lines. Your software will put them on the chart for you. And this is an example of hey, this is just a mess. And so the lesson here with this slide is just because you do have tools to work with, understanding support, resistance, trends, and patterns don't necessarily mean that you need to do or should do anything, not unless that thing's actually set up the way that is part of your plan and that you understand. This is one of my favorite testimonials from a student, someone that had been doing this for quite some time. and I heard this so many times, I wish I found Pristine before. Would have saved a lot of money and avoided, what we started and I spoke about with the Hocus-Pocus type of indicator mythology and the Holy Grails. It's about simplicity and putting that all together. What I've talked about here, keep it in perspective. Short-term event, we're looking to take advantage of something that sets up in the morning, and most of the time it's either going to pay you or not within the 15-30 minutes. The trade might last an hour if it trends, but as it says, it's not an investment. The stock should have either moved in the direction that you thought or stopped you out or given you enough information to make a decision. Bar by bar analysis. Some of you might be saying, well, what is that? Well, it's a concept that I came up with years ago that helps you focus on what's happening in the moment that's in alignment with the bigger picture. And each candle that forms will give you some additional information, and you'll put that in alignment with your bigger picture analysis. Some of you might be questioning, can I make a living doing this? Well, you want to keep things in perspective, not think about swinging for the fences, so to speak, and looking for, huge moves. And if you're going to trade for income, if you can, 50 cents a day, let's just kind of like make it real. Let's get the focus down to something that is attainable. Right? Not about necessarily making dollars. Right? Can you make 25 cents a day, 50 cents a day, and becoming consistent in what you're doing, building that confidence in what you're doing, and then increasing the share size. After you've taken the time to learn a method, prove to yourself that you can actually follow it, right? Gain confidence in it, and you'll work toward, like it says, making your dreams a reality. Pristine, has joined with Lightspeed, and we're proud to say that Lightspeed, as Pristine is Lightspeed's preferred trading educator, and with that, we're offering 25% off to Lightspeed traders on any of our courses. We have a newsletter called the Pristine Day Trader. It comes out before the open with those gapping stocks. It has a list of those some gappers. It has a couple of charts with that shows how they're gapping. You apply the strategies to them. It has a market update and what we believe should happen within the markets on that day, so it gives you a guidance. If you email counselor@pristine.com and tell them that you're a Lightspeed trader, they'll put you on the list so that you get that. There's no charge for it. You can join our community. You get the the chart of the week, our weekly lessons. We put out videos, our free workshops. Right? There's a workshop going on at Pristine right now, usually 3 or 4 days a week. There's a free workshop at 4:15. I did one actually last Saturday. We do them sometimes on Saturdays. So just by joining Pristine on the free community, you get access to all of that. But as a Lightspeed customer, if you're interested in a Pristine course, you automatically get 25% off, and you will get the day trading newsletter free of charge as long as you're a Lightspeed customer. So check that out and see how it might help you with your trading and what you're doing in the morning. If you're frustrated with your results, you want to learn more, get to know Pristine better. Come into the free workshops. You can talk to one of our counselors. You can email them. You're welcome to email me if you have questions. Greg@pristine.com or Greg@lightspeed.com. If I can help you in some way, happy to do it. If you have questions on this presentation, and again, I cannot see what you might be typing, but you're welcome to email me with those questions, and I'd be happy to answer you with that. And as with that being said, I'm done, Mike.
Thank you, Greg, for that great presentation. Again, just as a reminder to everyone that was here today, this presentation will be recorded and put on our website at lightspeed.com/webinar, along with all our other past webinars. So if you might have missed something, or if you want to revisit it at a later time, feel free to go to lightspeed.com/webinar, where you can view this webinar and go over any slides or interesting points that you might have viewed today. Again, we look forward to working with Pristine going forward, and if you have any questions, feel free to contact them.